Let's listen in to another voice. Jonathan Garner needs no introduction, emerging market strategist at Morgan Stanley. We spoke to him exclusively this morning. He's downgraded China this morning, maintains a relative overweight on India, but says Indian markets are vulnerable to higher oil prices and rupee being lower. Let's listen in.
Bearish on emerging markets generally. So on 20th of June, we took our target prices down quite considerably and are forecasting around 5 or 6% downside in dollars from current levels. But within that, we would expect India to do slightly better. But the general environment is quite poor with very large fund outflows. We had a firming of the Fed hike cycle expectations earlier this month. We've had relatively disappointing forward-looking growth numbers out of Japan, Europe, and North Asia. We obviously have trade protectionism. I think you highlight oil as a risk factor for India, but India's underlying business cycle is in a somewhat different position from other economies, and it's in a recovery phase, quite early recovery phase. So I think in that respect, we would still be relatively somewhat more bullish India, but within a generally bearish view on emerging markets.
You have an overweight stance on India on a relative basis. Do you think Indian markets could give positive returns from here, or Indian markets will also fall, but they would fall less with other emerging markets?
Yes, that's a very good question. I think they will fall by less, is our view. And if you actually look at the recent performance relative of the Indian markets to global emerging markets, that's exactly what's happening. So India is not amongst the worst performing markets. It's slightly outperforming, but not doing as well as, say, markets that are proving truly defensive, like Taiwan, for example, or in the broader Asia region, Australia. And one of the reasons that we turn more constructive on Australia and Taiwan is their very high dividend yield support. So having strong dividend yield support and strong domestic institutional investor support from the superannuation funds in Australia and the national pension funds in Taiwan, those are good things to have in an environment where global capital is flowing out of emerging markets at such a rapid rate.